We're glad to have you back now. Market dynamics represents the forces responsible for changes in the price and behavior of consumers and manufacturers. Based on the demand and supply of products in market, price signals are determined. Market dynamics keep changing with time. And of course, today we'll examine global and domestic markets dynamics. And with me is an investment banker. He joins me from the United Kingdom. He's also a financial advisor, Mr. Gbenga Ogunrinola. It's good to see you. Thank you so much for your time.
Thank you, Tolu. It's nice to be here again.
Yes, I want to start with the release by the IMF saying that the United Kingdom's economy might still, be a struggle to survive. There might be a little bit of stress in that economy, considering inflation and all of that continues to hit hard on that economy. First, my question to you would be, what is your overview of the present situation? Energy prices are still on the rise, and everything is not looking pretty good.
Yeah, so I think it's just a reflection of the global economy at large. So what the IMF have said is that the global economy is likely to decline by about 3% this year. Last year, it declined by about 3.5%. So invariably, really, what we're seeing is a reflection of what is happening globally, generally, all over the world. In terms of inflation, the inflation is also expected to drop slightly than what it was last year. Now, all these are just forecasts, really. In April, the IMF actually made a forecast about the economies, generally global economy. So far, I think the global economy has performed a little bit better than what was forecasted. So I want to believe that all things being equal, we might still see the same thing happen. By the end of the year, we might see some projections that still beat the IMF forecast.
We're talking about specifically about the gas price, which as of yesterday, we had a report that energy bill continues to swell. How has that come to you, and how are citizens or residents reacting to this in the United Kingdom?
Yes, well, the projection earlier was that by the end of this month and going into the last quarter of the year, that energy prices are going to drop. That projection still stands. Of course, there might be some issues here and there, whereby as a result of certain unforeseen circumstances, things could just go different from what has been projected. But generally speaking, the projection is that the price of energy is going to drop, and I'm sure that we'll still see that being the case by the end of the quarter.
Well, we see that most countries continue to increase rates to rein in inflation. It's happening here in Nigeria too, and we still stand at about 22 points, more than 22%. Talking about inflation, and it's happening everywhere. In the European Central Bank, the president just read out a report and saying that rates need to be increased. But it seems not to be addressing inflation. What do you think about this, and what do you think can be done?
Well, so one would look at it holistically. The inflation rate at the beginning of the year generally was a bit on the high side. When we look at, I think the United Kingdom came into the year 2023 with about 9% inflation rate. Currently is about 7.9%. So we can say that the inflation rate, at least from the last release, is coming down sort of. In other major economies like the US, currently the last report about the inflation rate in the US is about 2.97%. Inflation rates in other economies like the French economy, it's about 4.5%. The German economy too is having it lower than what it was earlier in the year. So generally, when we look at it, the inflation rates are actually coming down. Maybe not as fast as expected, but in a way, it's coming down. Now, when we look at the Nigerian case, I want to believe that what we're even seeing as the inflation rate, 22.8, which was the last released figure, is not, I don't think it's the actual rates really, because when we look at what is on ground and what the rates were around March, around May, and what it's been said to be the rate, I really have my reservations concerning those figures. But generally, the inflation rates globally is coming down gradually. It's a bit slow, but it's actually coming down.
See about policy tightening now, which we just mentioned. Let's link it now to the markets. Yes, let's look at the markets now. How are the markets reacting to all of this? We've got that flip-flop here in Nigeria, where we stay a bit positive, sometimes negative, despite the fact that a lot of domestic investors are doing a lot in Nigeria's market at this time. But what is happening? Talking about the markets in the UK and all of that. Let's look at them.
Yeah. So let's start with the interest rates. The interest rates, like you said earlier, has been on the rise, and the reason is that most of the central banks, they believe that the only way to curb this inflation is to increase the interest rates at least reasonably. The interest rates has been on the rise generally, and that has also, in a way, helped to retain funds locally, because if the interest rates are low with high rates of inflation, investors will be looking at how they can take their funds to environments and economies where they will get higher returns on investment. So most of the banks, I mean, the central banks have actually tried to ensure that they have competitive interest rates. And that has been what has actually been driving the interest rates competition now. And but in terms of the exchanges and the capital markets, we've seen a significant rise in most exchanges this year compared with what we saw last year. For example, the Nigerian market, as at yesterday, we were on 27.77% year to date, which is not bad. But when we, look at this with the technical devaluation in the economy, and technical devaluation in the forex market, then we would see that what we are seeing as in year-to-date gains are not really so significant. But in other economies, they have it significant. In the UK, it's not significant. They are barely also struggling with just 1.63% all-share index for the FTSE year-to-date. For other areas like the US, we have the Dow Jones doing about 6.5%. We have S&P doing about 18.66%. We have the NASDAQ doing about 35.27%. Now, these are very good figures in the United States. Also, in other major economies like in Germany, we have it's also good. They are doing about 16%. In France, they are doing about 13.2%. So these are good figures generally. What we're just seeing is economics trying to recover as a result of the Russia-Ukraine war, and also as a result of the post-COVID era, whereby economics were just trying to recover from the COVID situation, lockdown.
Also, China seems to be bouncing back, and now figures coming from that space seems to be looking good. And whatever happens in that country, United States, China, and all of that affects whatever happens globally. How does this come to you?
Yes, so one of the projections of the IMF is that, with the recovery of China, China had been on lockdown for a longer time than most economies. And that has also affected production generally, because a lot of economies have ties with China in terms of manufacturing and also in terms of export and import. So China's economy is very significant to the recovery of the global economy. And China economy, even though it's coming out of the woods, but it's a bit slow in its recovery. And I think that is one of the reasons why we are also having it a bit slow also in the world economy generally, whereby production and activities generally are not yet stimulated enough to, bring out the economy generally out of the woods. But the first thing is to see stability, generally. Once there's stability in the major economies of the world, then we'll see a gradual progression into positive territories of the economies.
Well, let's look at investors' confidence, which is something that we need in this part of the world. Talking about Nigeria now, many believe that clarity with our FX markets for investors to be able to repatriate their funds, bring in funds, and being able to take out their funds would attract more foreign investments into the country. You're in the United Kingdom. Tell us about what this means. What feelers are you getting talking about clarity of our FX policy, which indeed is key to driving investment?
Yes, so one of the impediments we've had in the past in the Nigerian economy has been the issue of Forex, where foreign investors are unable to repatriate back their funds after coming into the economy. And that had kind of slowed down the inflow of foreign investors into the economy. But with the regulation whereby, we have the same rates now, and investors can easily come in and also repatriate their funds, that has actually in a way, being a major factor that I believe is going to attract more investors. But at the same time, we need to be careful with some of these projections and policies in the sense that the interest rate, for example, is about 18.75%, which is one of the highest interest rates in the world. Now we've relaxed our foreign exchange markets where investors can easily come in and go out. Now, if we open the market so much such that we allow people to come, place funds in the markets, in the economy, and these funds are not put into any major use, and at the end of the day, they repatriate the funds, the economy will be the one to lose at the end of the day and not gain anything from that. So I think the issue of interest rates needs to be looked at. We need to look at how we can really stimulate the economy rather than having this a balloon kind of economy, because at the end of the day, it's like you just taking money from investors and not making use of it, yet you are paying interest. You are paying huge interest on those interests. On those money you are collecting, and at the end of it, you still need to pay their interest back. And if you've not put the money into good use, then it will be unfortunate because you'll be losing rather than really making any progress. So I think we need to look at that aspect of our interest rates, which is going up. I know the inflation is high, but there are some policies that have been put in place, which I believe, together with all the other things that are being done, like the deregulation of the downstream sector, where the subsidy has been removed, and the economy is kind of having a fresh air in terms of easy markets. So with that and other policies, I believe that we should be able to get things right. But if the policies we have is at a par or at parity with what we are trying to achieve, then we won't be able to really make any progress.
I must thank you so much, Mr. Gbenga Ogunrinola. It's always interesting having you join us on the program, investment banker and financial advisor. Thank you so much, and do have a great weekend and a profitable day.
Thank you for having me.